Assalamualaikum. My name is Ainur Fatihah Binti Kamarul Ariffin. Okay, let's start with the introduction. Numerous infectious diseases have been discovered throughout the years, and some of them have been the greatest nightmare when they spread outside a certain location and become pandemic. The COVID-19 pandemic has disrupted the lives of millions of people throughout the world and slowed the global economy, mobility, and enterprises. This research will examine the dramatic effects of this pandemic on the banking sector, namely the Islamic banking business. Movement Prevent Order, or MCO, was implemented by the Malaysian government on 18 March 2020 as part of its efforts to control the spread of COVID-19 illness. This 20 voyage of MCO has imposed a variety of difficulties on the enterprises, including a low client flow and a lack of funds for staff salaries and rent. As of 1 May 2020, according to the Department of Statistics Malaysia, 67.8% of the total 4,094 Malaysian enterprises reported no sales or revenue during the MCO period. In his special televised message on Labor Day, Malaysian Prime Minister Tan Sri Muhyiddin Yassin revealed that the country has suffered an estimated total loss of RM63 billion due to the suspension of all commercial activities since the MCO went into effect on March 18. Regarding the economic recovery process, the Malaysian government has released the RM250 billion Prihatin economic stimulus package. In addition to a reduction in the overnight policy rate, this package highlighted the bank's initiatives to provide financial help for firms or individuals, such as emergency loans to support small and medium-sized enterprises or SMEs, and flexibility for repayment of current loans, which is OPR. Regulatory and supervisory measurements implemented by the Malaysian government during the pandemic have affected financial institutions, notably the banking industry, in terms of loan growth, earning liquidity, and provisioning. And the COVID-19 virus cases in Malaysia. COVID-19 originated in Wuhan City, Hubei Province, China on 12 December 2019 and has since spread to more than 163 countries, including Malaysia, in a few of months. On February 4, 2020, the first Malaysian with a positive COVID-19 test results was reported. He is a 41-year-old Malaysian male with a history of travel to Singapore between 16 and 23 January 2020 for an international gathering that included Chinese guests. Ministry of Health or MOH websites, social media such as Facebook, Crisis Preparedness and Response Center (CPRC) hotlines, press releases and live press conferences by the Director General of Health were utilized to provide correct information about the infection to the public. Due to the new characteristic of the virus, the COVID-19 scenario changed, often necessitating the rapid development of standard operating procedures or SOPs for the reference of healthcare workers and the general public by the Department of Health. The Ministry of Health or MOH has established a temporary hospital in the Agro Exposition Park Sedang Maibs. This temporary hospital acts as a quarantine and treatment center for low-risk patients with 604 beds, computers, televisions, Wi-Fi, and other basic amenities for patients and medical workers. We will talk about Islamic banking and finance in Malaysia. According to the statistic released by the Central Bank of Malaysia, which is BNM, 16 Islamic banks operate in Malaysia under BNM's supervision. Currently, Malaysia has 3 indigenous Islamic banks with full capabilities, 5 Islamic banks controlled by foreign organizations, and 8 conventional banks with Islamic subsidiaries. Islamic banking generally refers to a banking system that adheres to Islamic law, often known as Sharia law. The Islamic banking system, unlike the conventional banking system, is interest-free and prohibits all business transactions and trade operations, including interest or riba, gambling, which is maisir, and speculative trading or gharar. Islamic banking promotes zakat, alms tax, prohibits monopoly, encourages incorporation for the benefit of society, and supports the development of all halal economic components, in addition to encouraging equitable profit and loss distribution. Islamic banks, like conventional banks, provide a variety of financial services and products, but they must be Sharia compliant. Since its inception in 1983, Islamic banks in Malaysia have continued to grow fast. The funding of the Malaysian Islamic banking industry had more than doubled during the past decade, reaching RM 611 billion as of the end of December 2019. Continuing to the effect of COVID-19 pandemic toward Islamic banking, in conjunction with the implementation of moratorium and other financial activities that rely on it, this caused banks to report fewer transactions involving the receipts of deposits, financing, and loan disbursement. Consequently, the global economy is anticipated to undergo an economic downturn and a protected recession, which will have a negative impact on the capital of financial institutions as their profitability and asset quality. In the meantime, RAM or Rating Services Berhad RAM Ratings said that Malaysian banks are projected to have loan growth in 2020 that is lower than 3.9% increase recorded in 2019. The analyst believes that the prohibition will test the resiliency of financial institutions by impacting their liquidity and operating capital to fund interest charges, overhead costs, and borrowing operations. Then, let's talk about the initiative planned by the government in developing financial institutions during the pandemic, which is the first one is bank loan debtors benefit from the moratorium. In late March 2020, Malaysia became the first nation to implement a 6-month moratorium when the Prime Minister Tan Sri Muhyiddin Yassin announced the financial relief plan. Consequently, Malaysian banks issued a 6-month automatic moratorium on all financing repayments with the exception of credit card balances by individuals and small and medium-sized enterprises, effective from 1 April 2020 to the end of September 2023. During this moratorium, a borrower is exempt from making monthly debt payments to the banks. The purpose of this effort was to alleviate the burden of people immediately impacted by the pandemic and to maintain funds within homes. In response to the moratorium announcements, some Islamic banks in Malaysia have taken proactive measures to address the moratorium package with their consumers. They initiated contract with their consumers to clarify the ban on Islamic hire purchase and Islamic fixed rate financing solutions. These include advising on specific matters such as changes in terms, which may include revised installment amount to be paid after 6-month moratorium expires and the revised durations. As instance, Bank Rakyat, the largest Islamic cooperative bank in Malaysia, has issued a repayment moratorium of up to 6 billion to its consumers. 70% of the bank's approximately 9,100 stockholders belong to the B40 household income category. This situation implies that numerous individuals and businesses in Malaysia has been impacted by COVID-19 and they require the moratorium immediately. Secondly, the reduced overnight policy rate or OPR impacted the performance of Islamic Bank. Recent action by the Monetary Policy Committee of Bank Negara Malaysia (BNM) to reduce the overnight policy rate, which is OPR, by 25 basis points to 1.75% is one of the measures taken to assist in the acceleration of economic recovery from the COVID-19 epidemic. The lowering in OPR has numerous effects on both the general population and banks. Local banks would change their base lending rate or BLR and base financing rate, which is BFR, in response to a decrease in the OPR. Indirectly, this will reduce the interest rate, resulting in lower costs associated with borrowing or refinancing an existing loan. As a result, bank would reduce the interest rate for current variable rate loans, resulting in a reduction in the monthly payment or installments of borrowers, and the new loans would adhere to the current low interest rates. On the other hand, a decrease in OPR indicates that interest rates on saving accounts and investment in a fixed deposit account will also decrease. In other words, investors would earn a smaller return on their bank investment than in the past. Special tax treatment for moratorium interest and/or earnings. On July 29, Prime Minister announced a further 3 months extension of the loan moratorium for persons who have lost employment and income as a result of the pandemic till December 2020. This extension of the moratorium is a step forward, a more focused approach to aid, which will prioritize consumers from the hardest hit industries such as travel, tourism, and hospitality. This moratorium facility will harm the bank's liquidity as loan repayment are an integral element of this institution's fundamental operations. According to banking analysis, a moratorium often does not influence the profitability of a bank, although it may alter their cash flows. This is a consequence of the shift in funding arrangement, which could result in a one-time loss for banks. During the moratorium period, although borrowers are not required to make payments to the bank, financial institutions continue to collect interest revenue, even though that the income has not been received. However, this accrued interest income is still taxable. To alleviate the cash flow strain on banks, the government has granted special tax treatment for moratorium interest by taxing it on a receipt basis. This type exemption allows banks to defer the taxation of interest income on such loans until they receive interest income from clients. This particular tax treatment is anticipated to mitigate some of the effects of the blanket 6-month moratorium and 3 months extension for the borrowers. Lastly, funds or special relief for SME customers. The global COVID-19 epidemic has created a severe economic depression for most firms, including SMBs. As a result, the Malaysian government, through BNM, has taken measures such as providing financial support to ensure their survival during these difficult times and to mitigate the domino effect of this outbreak, particularly due to the inability to continue operations during the months-long MCO. The financial aid from the banks totaled billions of ringgit, for which interested SMEs could apply via commercial bank, Islamic banks, and the development financial organization governed by BNM. These financial institutions may additionally obtain guarantee coverage for these facilities from Credit Guarantee Corporation Malaysia Berhad, CGC, or Syarikat Jaminan Pembiayaan Perniagaan (SGPP). Special Assistance Fund is the most prominent BNM relief offered for Malaysian SMEs affected by COVID-19, which is SRF. The purpose of this fund is short-term cash flow issues so that small and medium-sized enterprises (SMEs) can remain in the sector and protect their employees' job. As for the conclusion, numerous sectors, particularly SMEs, are significantly impacted by the COVID-19 epidemic and unable to support themselves, causing them to file for bankruptcy. As for banks, there is a direct effect on their business when their customers are in bad health. This is because when the economy is sluggish, non-performing loans will increase, requiring banks to make loan loss provisions. First, all banks in Malaysia, including Islamic banking, have provided an automatic loan repayment moratorium for 6 months beginning in April 2020 and ending in September 2020. Secondly, despite the fact that banks will not receive payments from qualified consumers during the loan moratorium period, banks must nonetheless tax the delay interest. Thirdly, COVID-19 has prompted the Central Bank of Malaysia to drop the BLR, resulting in a lower interest rate and an impact on the nation's inflation. Finally, Islamic Bank has provided a number of financial aids to its clients, such as the ITCAD microfinancing program for micro entrepreneurs and the special relief fund for individuals impacted by the loss of business revenue brought on by COVID-19. Consequently, future study might adopt a quantitative strategy by analyzing the data of all Islamic banks in Malaysia and assessing their performance during the COVID-19 pandemic.